Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, we have a lot to cover today. We have key movers like Netflix making a monstrous move up, tagging the $1,000 level in the pre-market today. Again, up about 15% on earnings. I want to talk a little bit about that when we get to that chart. Markets are trending up, not only because of Netflix, but also because of a new venture, $500 billion new venture with OpenAI, Sam Altman, Larry Ellison from Oracle, multiple other players here to develop and build out the U.S.'s AI side of the basically technology sector. So there's big things here that's helping NVIDIA go up because if, again, $500 billion is going towards this build out, you got to assume that the NVIDIA chips are going to be needed. So lots of positives. The markets aren't up a ton. NASDAQ is obviously leading the charge, S&P up about 0.5%, but let's get into the action. So over here, we can see that again, you could see the markets. This is the pre-market data on the S&P or the SPY. This was yesterday's close right here, right? So that was your close yesterday. You had your little initial pop on the S&P on the Netflix move and then the grind up. Little bit of a pullback there, but for the most part, a grind into the 8 p.m. close on the after-hours session right there. When markets reopened at 4 in the morning, a little bit of a push up and then a slow float up into the open today. And again, we're less than 30 minutes away from the stock market opening. So again, just generally net positive, not a huge gain, about 0.5% on the S&P. NASDAQ, again, should be up more because of Netflix, because of we're seeing Oracle rally, NVIDIA rally. A lot of these bigger chip names are rallying to the upside. All right, so let's go to the daily chart. Yesterday, we talked about how we were stuck in this parallel, and this level would be a key level to watch going into yesterday's close. Again, just to reiterate on what these levels were, you had these lines, right? This parallel line here with this line up here, which was these three little pivots. Yesterday, we closed on or fractionally above it. As of now, it looks like we'll push above that today, but I do want to wait till the close. You know, trading the close today can look at this and see where we are. Did we hold our gains today or do we see institutional selling? So again, little things like that need to be watched. Okay, so again, markets looking to open higher today. Risk on continues. We'll go into the Bitcoin chart in just a little bit. Gold continues to rally, which is kind of interesting because you're seeing the VIX come down, which is the fear index, right? But gold keeps going up, and you have to say to yourself, well, why is the risk-off safety trade almost back to new all-time highs while we're still seeing money flowing into names like Oracle and the S&P and the NASDAQ and NVIDIA? So there's a little bit of a dichotomy here, which again is creating a little bit of question marks in my mind that I want to continue to explore with you guys and see what it means. But let's get into our latest here. Let's get into our earnings from Netflix. This again, the earnings, interestingly enough, you can see right here. I mean, look at this monster move here. I have this level that I'm going to watch on the daily chart. It's a parallel. The level here is right around 980. So I'm curious, do we close today above 980 or below? Because again, this upper trend line going back to this pivot high from 2023, which is parallel to these lows, are going to be something to behold. But again, you know, right now we are trading just below that 1,000 level. And I want to go over here and just discuss something. So listen, the markets are always right. Price action right now, we're trading again really just above this line here, right around $990 to $1,000. But basically, earnings beat by a few pennies, revenues beat by a very minimal amount. In fact, earnings beat by only about 1.5% better than expectations. That's not a big beat. Normally, you would say, okay, if that was the only metric here, the stock might even be down today just because, again, it has had such an incredible run. But the key was their subscriber numbers. Now, this is where things get a little shadier, right? So I always try to be straight with you guys and point things out while also pointing out that price action is truth. But obviously, I want you guys to know the details on what is going on in the underbelly. So let's look at this. So subscriber growth was massive. They came in above, almost at 19 million subscribers added. They were only supposed to add about 9 million. So we're talking about 10 million additional subscribers essentially being added. Now, this is where it gets shady, is that number one, you had the Tyson Paul fight. So you got to figure at least a couple million people signed up for that. The question is, are they keeping their subscriptions? The next factor is the NFL games on Christmas. Now, Christmas was right at the end of the quarter. So you have people signing up. And listen, if you're like the ad-based tier is what, $7.99, $8.99, whatever it is. But if you're a football fan like I am and you didn't have Netflix, just to get those games alone, it was probably worth the $8 to get it. Right? And so the key is this, is that they're giving us these subscriber numbers with people signing up at the end of December. We don't know if those they canceled. So let's say 1 or 2 million signed up for the football. Let's say 3 or 4 million signed up for the Jake Paul fight, Tyson fight. Again, we don't know about those cancellations. Now you might say, okay, well, we'll know in the first quarter. No, we won't. This is where it gets even crazier. Netflix will no longer, after this quarter, Netflix will no longer report its subscription numbers. So this was it. This was it. This is all you're getting. Going forward, you're only going to get revenue and earnings numbers. I mean, again, call me a conspiracy theorist, call me whatever you want, but this seems a little bit weird, especially that they put these football games right at the end of the quarter to get that boost up. Again, for all we know, 2 million, 3 million people have canceled since then, but they will never be reporting that in the future. It's just what it is. Just what it is. So that's one of the reasons why I think this is a fade here. 1,000 even number, which is what we're tagging here. Again, even numbers have some sort of amazing factor to them. I would actually look to fade this and bring it back in. I'm not saying it's going to come, by the way, I don't think it's going to come back to the break even today, but I think it could come back to, let's say, 975, 965, maybe even 950 today. We'll see where it closes, but if it doesn't even come back there today, I still think it's a fade on a swing trade basis back down, as I got to believe smart money, institutional money, realizes what I just said, and they got to understand that, again, chances are this was the last hurrah for Netflix, since this is the last time they were reporting subscription numbers, and again, we'll likely see price from the institutional side they'll be dumping into this. Retail may buy it, though, and that's what they're hoping. They're hoping this number gets retail to buy, institutions to unload. So just be aware of that, guys. Certainly, I'm not buying it up here at 1,000. I can tell you that. I certainly am not. All right. United Airlines is trading up a little bit pre-market here. It's not up a ton here. It's up about 6% or 5 to 6% pre-market. But again, this is one where as long as it holds this trend line right here, it's still fine. It could technically grind higher. This is the line in the sand that once this breaks, you get that kind of big fall to the downside. Great example of this would be like General Electric, right? So, oh man, this is actually a great chart. I didn't even realize, I didn't look at it since a couple days ago. But let's go over to the big board to dissect this. So this is a great example of these upsloping trend lines and how they react. So you see how price was just kind of grinding on it, and then it got its first big move. It retraced to the scene of the crime, popped, retraced, bear flagged, and then look at what happened when it broke. It went down almost in a straight line for 2 weeks. But what's so cool about this, and what I actually just saw now when I brought this up, is look at where it retraced into. What is that called? It's a retrace to the scene of the crime. There's your trend line. There's your breakdown, retrace to that scene of the crime. That's a dead-on short, all right, folks? That, again, is a dead-on short. You have a little bit of a gap fill just above as well, which is going to add resistance to this chart. But for me, at least, that, again, every day of the week, based on probability, and again, doesn't mean it's going to work always, right? We know probability by default doesn't mean 100% success, but it means more than likely you'll get some sort of fade off of this on General Electric. So just keep an eye on that. That's actually a really good swing trade chart right there for a pullback on GE. Now, Oracle rallying higher on this new venture, $500 billion venture with a B. And again, this is with ChatGPT's OpenAI and so on and so forth. There is a level, I actually already traded it pre-market, gap fill right here at 190.60. So again, this will be a key level to watch. 190, really 190.50 we'll call it. So you see the big gap right there. So price again up into that. That will be first resistance. And then you have your secondary resistance right around 198. And then the last thing, and I saw Drew had posted a chart on this, is that you also have a parallel here. Let me see if I can do this correctly. But you also have a parallel right up here, which gives you a secondary level. So these would be your key levels. Level 1, or just above 190. That could be day tradable today. As with this one, the swing trade level would be right up here. And this price point on the swing trade is around 205 to 206. So that'll be something to watch. Now, yesterday in the game plan, I talked about Apple. I said, hey, Apple's falling again. And sure enough, it did fall. I gave you guys the level here. I said 220 to 230. 221 would be your key support. And sure enough, where did Apple go yesterday? Right into that level and got a bounce. Now, it is trading slightly lower today, but this still should be very firm support considering that you had a 15% drop from the highs in a straight line. So generally, when you hit this, you get something like this, maybe back to the scene of the crime break right there, and then eventually the bigger rollover. So I still think Apple's going lower. I still think, again, their growth rate, issues with China, the Chinese economy, etc. These are all issues that are not over yet for them, and that you'll probably see the stock go lower. But on a technical basis, as long as it's holding this 220 level and doesn't confirm below, you favor a short-term bounce, and then maybe after that, a rollover to the downside. All right, so a couple little interesting factors there to take a look at. All right, next up, let's flip over to Bitcoin. Bitcoin is pulling back just a little bit on the charts. I always like to go over to the big board for Bitcoin to kind of take a look at it here. So really what we have in this situation is that we retraced up into that level, right? So there's your double top and your upsloping, and I've gone over this every day, but what you do is you get a topping tail here. And then very often when you get a topping tail, so let's just draw this in here. Here's a topping tail has to occur at basically a high in the last 90 days or longer. That is what it did. It actually pierced this double top, so it was a high. And you have to have a body that's in the lower, basically 25% close. And that's what, again, that creates. When you get a topping tail, I would say about 70% of the time you get a retrace of that. And so generally you'll get, basically there's a lot of bullishness here and the institutions are dumping into the retail buying. That's why these candles usually form, right? You get bigger money dumping in after it pushes up. That creates that long tail or wick on top. But what ends up happening is that the buyers that were so eager to buy even at the highs, they're still there. And so oftentimes they'll come back in and price will rally up and retrace, and then you get your bigger fall over or rollover. So what we're curious to see on Bitcoin is, does that happen here? Now, the way you would know if it doesn't happen, any daily close above the topping tail high right there at about 109,300, that would negate the topping tail. It would then be void, and you would start to expect a break to the upside to about 120. As long as this holds in place, double top, trendline cross, and topping tail retrace, the path of least resistance, slight favorability, slight probability would be to the downside back to 92. So we'll keep an eye on that. For that to happen, by the way, the stock market's going to have to roll over. Like if the stock market's going to keep going higher and making new all-time highs, very unlikely Bitcoin would roll over. Again, it's a risk asset. It behaves as such. We've seen it roll over when the NASDAQ rolls over. Okay, gold continues to be awesome here, continuing to rally higher. We know our level right up here. Now, let's just game this out. I always like to game these things out and just show you where or how the charts can react. So if we take a look here, right? So if we take a look at the gold chart, we've continued, so we confirmed, right? Let's go through step by step. Wedge pattern, all right? Closed above, didn't confirm. Didn't close above, confirmed, right into minor resistance. Minor resistance means a small pullback. Then you're getting your bigger break up. Let's just say this continues up into your all-time high here, your double top right up there. The way I game this out in terms of what could be a possibility and how I would trade it, I'm going to probably end up unloading some of my GDX, maybe some of my Newmont mining into this double top, and then expecting a retrace to the scene of the crime, and then that next big move up. So again, just to kind of game it out, doesn't mean it'll happen this way, but this is the way in general charts can often behave. So we'll look for a little bit more upside, see if we can tag double top. Double top's going to be major resistance. It should see rejection, and then we would look for support here to then create that next wave of buying to the upside. All right, keep on rocking and rolling here. If we go to our silver chart, silver again, you can just see how weak this is, really remarkably weak. So while gold is higher, silver is weaker again. And by the way, this is for pretty much all the industrial metals. Like if we go to nickel here, look at what nickel's done recently. I mean, look, it couldn't even get above this level right here. This was major resistance, and it's getting rejected today to the downside. But look at the fall on nickel. I mean, so many of these charts here. Copper's had a good bounce recently, if we go to copper, but you can see it went right up and it's getting rejected. You can see I already gamed it out what I think could happen, maybe a retrace here and then a bigger move up on copper. We'll see if that coincides with China starting to show some economic signs of recovery. But either way, you zoom out on this, you can see copper's well off those highs. All of these industrial metals continue to struggle, and silver's no different, right? As much as we like to think of silver as a store of safety. It's not so much. In fact, I think it's becoming less and less a store of safety in this day and age, especially with the introduction of Bitcoin. I think Bitcoin has kind of taken over that in some respects, although still a risk asset. All right. By the way, a lot of you guys always ask for palladium. I can quickly look at palladium here today. Palladium, again, you can see it's kind of grinding up a little bit today. This was a beautiful trend line. There's your breakout, retrace, bounce, retrace, and then bounce. I actually like this chart. If you zoom out on this, look at how beaten down palladium is. I continue to be a mid to long-term bull on palladium. I just think there's a lot of potential upside here on this. Granted, doesn't mean it can't come down and retest this level down here at around 860, but again, so rare, compared even rarer than gold, it does make sense that it could outperform. Looking at platinum, as long as we're talking about these alternate metals, we can see again, platinum, same thing. I mean, in the scheme of things, it's really been beaten down. It's been in a bigger wedge pattern here. Wedge pattern breakout would be above 1050 essentially right here. It's down in the lower ranges with support here. It's not doing a whole lot. In fact, it's just chopped in recent days and weeks and months. All right, let's go on to oil here. WTI. I continue to hold my short here. We're still in the money nicely. Target remains first target right here. Again, I plan on taking half off with commodity members there, and then we'll see if it bounces. Do we want to re-add if it does, or if it just continues down, then we'll hold that remaining half for this $66 level. Now, natural gas getting a little bit interesting because it's finally into a key level, although it does look like it is bouncing. So we'll run over to the big board real quick here and just take a look. But basically, you have this trend line, right? This trend line right here, it's a parallel with these two. Here's your parallel, and you can see again, it keeps hammering and hammering and hammering and hammering and hammering. Today it's hammering again. For me, there's no buy here. It's because this line again is weak, so it could break. It's more of a 50-50, like is it gonna get a small bounce and then break, or does it just break? I don't know. I don't have an edge here. If I don't have an edge, I'm not trading it. That's just the essence of it. For me, again, I've got to have a very strong probability, 75, 80% in my view, to get me involved in trading a chart, and that certainly isn't happening here. Especially because remember the old adage, as I always talk to you guys about, upsloping channels, 7 out of 10, 8 out of 10 times they break down. Downsloping channels, 7 to 8 times out of 10 they break up. So this is an upsloping channel, so eventually, doesn't mean it can't bounce even back here, but eventually you would anticipate that this breaks to the downside, especially as we're so cold here in the US. Once that passes, if things start to warm up, that demand for natural gas could drop, and it usually forecasts that in the price. That might be what we're seeing here as it comes back into this technical level. All right. Other than that, folks, it's just a wait and see. Are we going to get any new news and executive orders or big commentary? There was some chatter from Trump about potential China tariffs, but again, a lot of this so far seems to be a lot of threats. We don't have any specific dates or how much these tariffs could be. Yesterday it was Canada and Mexico. Today a little bit of China. China stocks aren't really reacting much. As I told you guys prior, they've been beaten down so much that I don't think there's that much downside even if tariffs go into play. Other than that, watch for more earnings after the bell today. We will talk about it in Trading the Close. I believe Drew's on Trading the Close today, so he will take you through any big earnings. Awesome stuff, great levels. Hope you've enjoyed this, folks. Thank you so much for tuning in, as always, and supporting Verified Investing. I'll see you tomorrow. Take care.